Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The tech pullback continues. Global stocks sliding as investors await today's US jobs report. Meanwhile, progress stalls in US-Iran peace talks as Hezbollah rejects a ceasefire in Lebanon. Oil steadies after falling on the Middle East optimism. And Ukraine's President Volodymyr Zelenskyy calls for talks with Vladimir Putin as the Russian leader rejects efforts by European leaders to kickstart negotiations. Well, a very happy Friday, everybody. Your markets look like this. Red across the screen for equities as traders question the durability of the AI rally. We have seen losses of 7% on South Korea's Kospi this morning. It's paired some of them now, but we are still deeply negative, down 4.5%. Remember, this is the world's best performing gauge this year, a bellwether for AI investments. So what happens in Korea does not stay in Korea. It weighs on the global risk mood. We also had that disappointing Broadcom forecast yesterday weighing on the Nasdaq. Its second straight daily decline. So we're looking for more declines today, down 0.9% for Nasdaq futures and flat to the downside here in Europe. Is this healthy, you might ask? Now, let's flip over to the cross-asset picture, and you can see we have oil edging up ever so slightly this morning, up 0.3% on Brent at $95.34 the barrel. So recovering some of the losses set off by that optimism that a ceasefire between Israel and Lebanon could have led to a broader US-Iran deal. Gold declining on the geopolitical uncertainty. And as we look ahead to the data highlight of the week, the US jobs report, of course, we have Treasury yields steady at 4.47 on the 10-year. Now, speaking of the risk events on the docket, let's have a look at what we have today. At 7:45 a.m. London time, we shall get the French industrial production numbers, followed by at 9:30 a.m. the Bank of England decision makers panel survey. This is where they ask CFOs really about the risks around inflation persistence, so very closely watched by the Monetary Policy Committee. And then the highlight of the week, as I say, is the US jobs report at 1:30 p.m. London time, expected to show a solid rise in payrolls in May and unemployment holding at 4.3%. We'll bring you a proper preview in just a moment. Let's set you up for the day ahead. We begin with the tech momentum that's driven markets to record highs this year, fading as the Asia session draws to a close this week. A bumpy finish in sight for AI bellwether, the Kospi, and we can get an update right now from Winnie Su in Hong Kong. Winnie, real outsized moves out of Korea today.
Yeah, good morning, Lizzie. Exactly. We are seeing Korean stocks leading declines today with the Kospi here down more than 4.5%. Yes, we actually heard from NVIDIA's Jensen Huang saying that they've qualified all three memory chip makers to supply for the HBM4 chips. But you are seeing that it's not really helping the overall gauge as much, especially because how Korean stocks have really been having that blistering rally so far this year, up more than 100%. And now it is highly concentrated, highly leveraged, and also highly volatile. But overall, you are seeing further weakness in the MSCI Asia. We're talking about the Asia stock gauge here heading for the first weekly declines in 3 weeks. And now that's really being driven by the declines that we are seeing in the tech stocks. And as investors rotate away from tech shares, now you flip a board and take a look at where that money really is flowing into, because they are leaving tech shares, but in fact they are going into the likes of Japanese banks here, with expectations rising for the Bank of Japan to raise rates later this month, and also some money flowing into the likes of Chinese consumer names as they have been really underperforming so far this year as well. We are also hearing, interestingly, that investors are pulling their money away from these AI stocks. Some are actually thinking of parking that money money so that they can invest further into the SpaceX IPOs to come. Now, flip aboard and take a look at what's going on currency-wise, because we are seeing that continuous weakness when it comes to Asia's FX. Specifically, we have the Japanese yen still hovering around the 160 level against the dollar. You have the Korean won also at its weakest level against the dollar since 2009. And not to mention the Indonesian rupiah at another record low. Now, we are all on intervention watch for these central banks to move, for the government to step in to support the currency. And it is even more important now that we have the U.S. jobs data coming up. Should it be hotter than expected, that will also further weigh on Asia's currency. And it really raises the question if these central banks should be raising rates earlier than later.
Winnie, thank you for the update. That's Bloomberg's Winnie Su in Singapore. Well, that AI pullback that Winnie was talking about is also expected to weigh on US stocks at the market open. We've got Nasdaq futures leading declines this morning, down 0.9% as things stand. Let's go to David Savage, Bloomberg MLive strategist now. And so, David, I do wonder how big a deal this drawdown is. Just give us some context and really whether it could be seen as healthy to have a bit of a correction.
Good morning, Lizzie. I think that's right. And I think, interestingly, what we saw overnight, we saw U.S. semiconductors stocks sell off. And we saw the memory chip makers in the U.S., Micron, SanDisk, also sell off. But really mirroring what we saw from Samsung Electronics and SK Hynix on Thursday. But the sell-off today has really accelerated, particularly in South Korea. And so I think it's a little bit more specific to this market. We've seen really elevated levels of volatility in the South Korean market. We've really seen a one-way trade higher. And so, as you said, it's a healthy consolidation of gains because at some point, the velocity of those gains, leads to some market exhaustion. You see traders, you see investors start to take some of those gains, take some of those profits off the table. And that can lead to some pretty, sharp drawdowns. Particularly, we've seen retail really drive the flows in South Korea, increasingly using, more speculative vehicles, some of these leveraged ETFs, single stock leveraged ETFs, which can really start to exacerbate some of the downside. And so I think the biggest note and pass through for the U.S. market is just the impact that these chip makers, Samsung Electronics and SK Hynix, really does have on global markets and the pass-through in terms of risk sentiment.
And David, of course, all eyes are going to be on the jobs report out of the US later. Analysts saying that the risks are skewed heading into it. If it's a strong report, yields will go up a bit. If it's a weak report, we could see a rally. Just how significant a shift in consensus could we get off the back of these numbers, when it comes to the Fed outlook?
It's an interesting setup because we've really seen, first of all, rate hike expectations really start to ratchet up in the U.S. We're pretty close. We're certainly priced for a rate hike in early 2027. It's been inching up closer in the back half of 2026, which is a huge change given where we were just several weeks ago. And a lot of that is not just on the back of the acceleration in inflation. We've actually seen a pullback in oil prices. A lot of it's been on just the firmer growth data and activity data we've seen in the U.S. And so part of that particularly has been the labor market. So if the labor market is really steadying, does that leave room for the Fed to start to move away from the potential of rate cuts, but actually move towards rate hikes? So I do think the setup is interesting today, just given how far we've moved. And we've certainly seen on the long end, we've seen bond yields really come off the cycle highs. So 10 years under 450. That's well off the cycle highs we saw just a few weeks ago. So it definitely leaves I think, again, skewed setup for bond yields.
David, thank you for the preview. That's David Savage, Bloomberg MLive strategist, ahead of that jobs report later today. Well, meanwhile, there's been no sign of progress in ceasefire talks between the US and Iran after the worst burst of violence in weeks, and as Hezbollah rejected a US-brokered truce in Lebanon. While President Trump says that ceasefire talks are in the final stages, Iran's foreign minister said no tangible progress had been achieved. Let's get more now. We can go to our Bloomberg Horizons Middle East and Africa anchor, Abir Abu Omar. She joins us from from the region. She's in Dubai. Morning, Abir. We've had one analyst putting it really well. If Trump can't restrain Israel in Lebanon, how can he control Israel in Iran? What do we know about Hezbollah's rejection of this ceasefire?
Good morning, Lizzie. That's a very good point to bring up, right? Because Israel's hostilities against Lebanon, or the southern part of Lebanon, have continued. But what we know about Hezbollah's refusal to this deal is that its chief, Naim Qassem, came out and said that he thinks that the deal reached between Lebanon and Israeli counterparts in Washington was absurd, that he has no incentive to stop attacking the northern part of Israel if troops do not pull back, if Israeli troops do not pull back. And so what we're seeing is three different perspectives at this point, right? We're seeing the Hezbollah rejection, where we never really had any reason to believe that they had the incentive to agree to the ceasefire. Remember, they did not acknowledge these talks in Washington. They refused to take part in them. And then you have President Trump's side, and he says that a deal between the U.S., Iran, and Israel is in its final stages, that he did not see Hezbollah's rejection, that as a matter of fact, he spoke to representatives from Hezbollah and they told him that they want a ceasefire. And then you have the Iranian side, right? Iran is obviously the biggest backer of Hezbollah in Lebanon. And Iran, through its foreign minister, Abbas Araghchi, said that progress in the broader deal, or what we're calling the MOU for now, has stalled over the past few weeks. And this is because of multiple sticking points. Lebanon emerging as the biggest one of those sticking points over the past couple of weeks. So what you're seeing happening now is an extension of these conflicting statements between the three parties. Hostilities continue. We saw earlier this week that hostilities had become the most serious since the ceasefire was reached in April. We saw attacks from Iran on Kuwait and Bahrain, leading to one person being killed in Kuwait, and Kuwait halting flights from its main airport because of some significant damage there. All the meanwhile, the Strait of Hormuz remains effectively closed. Tankers and ships are moving at a fraction of what they were before the war. But again, prices are not moving as tremendously as they would have at the start of the war. And this is as investors and traders really try to get a read on what to think of the latest developments, Lizzie.
OK, Abir, thank you very much for that as we look ahead to the weekend when everything seems to happen in the Middle East. Bloomberg Horizon's Middle East and Africa anchor Abir Abu Omar out of Dubai. Well, still ahead on Daybreak Europe, President Zelenskyy writes an open letter to President Putin offering talks and a ceasefire in the Ukraine war. We'll get the details. But first, warnings that a long-delayed reckoning may finally be approaching the private credit industry. We'll bring you that story next. This is Bloomberg.
One of the things that we've tried to highlight is that the private credit market sits at about a 40% loan to value, meaning it's underpinned by a significant amount of private equity. And so if you want to talk about stress in private credit, you have to talk about stress in private equity.
The Aris Management co-founder and CEO speaking to Bloomberg this week about the stress in private markets. Well, the recent calm in the market has turned to a drumbeat of dread after rising requests were reported by Cliffwater. Blackstone says that it's limiting redemptions from BCred, the biggest private credit fund of its kind. Swiss firm Partners Group has also capped withdrawals at one fund and is ready to gate others. Let's get the latest now with Bloomberg's Anthony Stevens. So, Anthony, is the golden era of private credit well and truly over then?
Right, after years of growth, right, they're playing defense for the first time. I was catching up with people in the industry just yesterday, and they're really going on the defense with regards to investor education. And why that's important is the concern in the market now is around liquidity and marks. People are concerned about liquidity because they have no idea where things are marked. And that is a theme that even US regulators have picked up. So you've had the US Attorney General, the Fed, the SEC, all asking more questions. Now, of course, marking is private by definition, but investors are clamoring for more detail on where things are marked, given that we're at the end of a credit cycle. So we might be pivoting to rate hikes. We might be pivoting to AI disruption of these software software loans that private credit has invested in. So now investors are asking for an update on where these things are marked. And private credit over the last few years has been accused of very aggressive marking of these securities. So these concerns are now coming to the fore, and they are really playing defense in terms of keeping investors on side. Because if investors all rush to the exit at the same time, this is not a liquid asset class.
Yeah, so we wonder whether redemption requests are just going to keep on climbing. How are other firms dealing with this? Are they changing strategy? Are they taking steps to head off the withdrawal issue?
In some sense, the broader macro helps, right? So as Goldman mentioned at the Bloomberg Credit Conference, credit quality and credit concerns are very low. People are flush with cash. Generally speaking, economies are doing quite well in the DM world, and credit spreads are quite tight. So this overall credit quality is quite solid. On the other hopeful side of things, people are learning to differentiate between certain books of private credit and others. For example, Blackstone traded up 8% yesterday, despite getting withdrawals, and that's because it came with another statement that fundraising on different portfolios is going well. So this differentiation between between loan quality and sector exposure and liquidity exposure is going to be the differentiating factor. So this education push around some pockets of private credit doing better than others is going to drive differentiated performance. Lastly, investors seem much more comfortable with playing for scale and brand and long-term tenure in the market, with the bigger players suffering kind of more muted drawdowns than the smaller players.
All right, Bloomberg's Anthony Stevens, thank you very much for the analysis. And I have to say, while you're with us, many of these fantastic charts we show on screen come down to Anthony Stevens. So thank you. Have a great weekend, Anthony.
Thank you for the heads up. Thank you.
To some other corporate news this morning. Bloomberg understands that Jane Street's planning to build and finance its own data centre to keep up with growing demand for computing power. Sources say that the market-making firm is talking to companies in the tech, crypto and finance industries about building a facility. Talks are still in the early stages, and the exact capacity and location of the data centre are yet to be determined. Elsewhere, Bloomberg has learned that Airbnb CEO Brian Chesky is starting an AI lab. Sources say that Chesky is in the early stages of funding the new venture and plans to focus on user interaction and design. Unlike online travel rivals Expedia and Booking, Airbnb has not partnered with OpenAI to create a plugin, and Chesky said that ChatGPT's tools are not robust enough. And Broadcom shares plunged by the most in more than 16 months after investors were disappointed by the company's forecast for AI chip sales. We spoke exclusively to the company's CEO, Hock Tan, at the Bloomberg Tech Conference in San Francisco and asked him whether the AI boom means there's no longer any need to use M&A to help growth.
And it's an interesting question. It's a very valid question because it crosses my mind and that of my boards on an ongoing basis, not regularly, as do we do M&A. So I'll be very flip and give you a straight answer. In the last 2 years, between 24 and 26 this year, I would be doubling my revenues. I would create over $50 billion per year, annualized, on revenue. I'm looking around, what can I buy? They even come close to that. And that's the tricky part. I mean, it's a distraction. All M&As are distraction to acquire, go to regulators, a further distraction to integrate. Another year. Meanwhile, organically, this phenomenon we call generative AI and our ability to ship them picks and shovels, the compute capacity into this demand, which is almost insatiable, makes it very hard to choose M&A over focusing and succeeding in generative AI compute.
Is there any area where you think you might want to sort of make an exception to this, whether it's maybe photonics, just to name one area?
Photonics? Or you mean optics?
I'm just throwing
anything.
Out... Yeah.
I ran a business model 20 years. I tried to, very hard, I know, try to avoid bright, shiny objects.
Broadcom CEO speaking exclusively to Bloomberg's Tom Giles. Well, coming up on Daybreak Europe, as OPEC Plus meets this weekend for the first time since the UAE's exit, we'll discuss what to expect. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:24 a.m. here in London, where we have OPEC Plus set to meet this weekend. And for a preview, we can speak to Bloomberg's Anthony de Paula, Middle East energy correspondent. He joins us now from Dubai with more on what to expect. So good morning, Anthony. Lots of Anthonys in the show today, by the way. What is the difference that the UAE's departure has made to OPEC? As you say, this is actually the second meeting where we won't have had the UAE as part of the organisation.
Yeah, good morning, Lizzie. The UAE coming out obviously takes out a bit of oil that OPEC Plus could add back because they had taken a bunch of production off of the market by setting quotas for the various producers. They'd set those various quotas over the past several years, and they've been rolling them back really mainly over this year. And so that takes out some of the firepower, let's say, that OPEC Plus can bring back in the market. Of course, what we're talking about are theoretical barrels at the moment, because most of the OPEC Plus production and most of that spare capacity is inside the Persian Gulf, and that's not coming out because it's blocked by the closure of the Strait of Hormuz. So we've got major producers in there like Iraq, like Kuwait, like Saudi Arabia, which does have some access to the Red Sea, but those countries have had to cut production because they haven't been able to maintain their exports. The UAE also has had to slash production. They are also shipping some crude via pipeline out to Fujairah, which is outside of Hormuz. So we've got some exports going from the UAE, from Saudi. That's really not more than a Band-Aid on the market here, as we still see prices very high as we're waiting for that Hormuz to open. What this OPEC decision does is last month's first meeting gave the group OPEC Plus a chance to come together, show a little bit of unity after the UAE exit. This month they'll be moving closer towards getting rid of those quotas, getting rid of those cuts. They expect to unravel most of those cuts by September. That will be putting the group in position to add that production without restrictions once Hormuz gets reopened. But it's going to take time for those producers to bring that production up. We don't expect that OPEC Plus will be stopping producers from putting oil on the market if it's needed. The issue is going to be one of being able to get that production up, being able to get the vessels there and get that out to market as quickly as it needs to be, Lizzie.
OK, so the mixed messaging on peace talks, not really bearish for oil yet.
Yeah, well, oil is going to be bouncing around on those headlines. We did see attacks this week, which didn't really see oil prices spiking as much as you might see. We did even have a fatality in Kuwait at an attack on the airport there. But we've still got the messaging from the White House that they're close to a deal. These attacks seem to put that at risk. We've also got the issue of the ceasefire plans between Israel and Hezbollah in Lebanon, which are also a factor here. So Iran is really playing all its cards. Hezbollah, Hormuz, trying to get back some funds in frozen money. So they're really playing all their cards and using oil as a weapon there. Lizzie.
Anthony, thank you very much. Bloomberg's Anthony de Paula, Middle East energy correspondent out of Dubai. Thank you for that. And we are looking at Brent at $95 a barrel right now. Coming up, talking about the talks, the latest on the possibility of negotiations between Russia and Ukraine. That's next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The tech pullback continues. Global stocks sliding as investors await today's US jobs report. Meanwhile, progress stalls in US-Iran peace talks as Hezbollah rejects a ceasefire in Lebanon. Oil steadies after falling on the Middle East optimism. And Ukraine's President Zelenskyy calls for talks with Vladimir Putin as the Russian leader rejects efforts by European leaders to kickstart negotiations. Well, happy Friday, everybody. Welcome to the show if you're just joining us, 6:30 a.m. here in London. And this is the picture in markets. Red across the screen for equities as traders question the durability of the AI rally. South Korea's Kospi has been down 7% this morning. It has pared some of those losses, as you can see. We're down 4.5% right now. But remember, this is the world's best performing gauge this year, a real AI bellwether, so it weighs on global risk sentiment. As you can see, Nasdaq futures down 0.9%. Already that disappointing Broadcom forecast yesterday weighed on the Nasdaq. Its second straight daily decline. Looks like we could be in for another day of losses, and futures here in Europe flat to the downside too. Now flip cross asset, and we've got oil edging up today. We've just been discussing with Anthony De Paula the impact of that optimism that a ceasefire between Israel and Lebanon could lead to a broader US-Iran deal, and then that fading. So we are now at $95.34 the barrel. Gold declining on the renewed geopolitical uncertainty at $4,442 an ounce. And as we look ahead to that crucial US jobs report later on today, Treasury yields steady at 4.47 on the 10-year. That's what's happening in markets. Now let's turn over to the front pages this morning, and we'll kick off with the Wall Street Journal. They focus on the outlook for private credit. Their piece says the anything goes era of lending is coming to an end. Meanwhile, on the front of the Financial Times today, they have SpaceX and reports of projections from Goldman Sachs showing that revenue from the company's AI division are going to rise to $322 billion in the next 5 years from just over $3 billion today. Then if we look at the French paper Le Monde, today they've got a report from the Institute for Climate Economics, which says that climate investments are showing signs of life in reaction to the war in the Middle East after 3 years of stagnation. So one of the unintended consequences, perhaps, of that war. But you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find, as ever, by going to DAYB Go. Now let's turn to the geopolitics. The Ukrainian President Volodymyr Zelenskyy has proposed peace talks with Russian leader Vladimir Putin in an open letter, saying that Ukraine is ready for a full ceasefire during negotiations. Putin has pushed back at separate efforts by European leaders to help negotiate an end to the war, while President Trump has welcomed Zelenskyy's initiative.
I'm glad that they're maybe talking about Mania. I think we had a lot to do with it. I know exactly what you're doing. But I think it would be great if they met. They should get it done.
Let's get the latest now with Bloomberg's team leader for Russian government, Anthony Halpin. Tony, let's start with the Ukrainian letter. What do you make of this offer from Zelenskyy?
Well, I think President Zelenskyy is trying to do two things, really. First, he's trying to simply kickstart a talks process which has run into the sand since the Middle East crisis erupted back in late February. The Trump administration has been focused on that and hasn't led any talks between Ukraine and Russia since then. And he's also trying to set the terms of debate, really. He's basically saying to Putin, look, we should talk about stopping the war on the current front lines, and your wish for us to surrender more territory, particularly in eastern Donetsk, isn't acceptable to us. Whatever you thought you had agreed with President Trump back in August in Alaska at their summit. So he's trying to really say, look, I'm ready to talk, but you have to do it on our terms as well. And the Europeans also need to be involved.
But what about the US role in all this? Because in Washington, the Democrats won this vote in the House, support from 18 Republicans backing aid to Ukraine and sanctions against Russia. How important is that to where peace and the war may end up?
Yeah, I think it's a reflection in Congress of some frustration at the Trump administration's strategy. In contrast to the Biden administration, they've taken a much more even-handed approach, basically trying to mediate between Russia and Ukraine. I think many Democrats, and now it seems a few Republicans, are a bit tired of that approach. They say, look, there's one victim in this, which is Ukraine. It was attacked by Russia. and they would rather see more support going to the democracy, the victim in this war, and standing up rather more firmly against Putin's government, which they regard as authoritarian. So it was an effort to say that we support more sanctions on Russia and we're ready to support more loans and other aid to Ukraine. We'll have to see whether it goes further through Congress, but it's definitely a signal.
OK. Tony, thank you very much. That's Bloomberg's Anthony Halpin. All the Anthonys on the show today. Thank you very much. Well, turning now to today's big take on the terminal. Across Congo and Uganda, more than 470 suspected or confirmed cases of Ebola have now been reported. The epidemic is spiralling out of control, exacerbated by a mistrust of authorities and severe foreign aid cuts, plunging the international system built to contain outbreaks like this into crisis. We can speak now to our Chief Africa correspondent, Jennifer Zabasajja, who I'm pleased to say joins me now in London. So, hey, Jen. What's been the impact then of defunding? Let's start there.
Lizzie, I mean, if you take a look at what we've seen over the past year or so, funding is a significant contributor to what we were seeing prior to an outbreak, so outbreak preparedness, but then also the response capacity for a number of workers on the ground, but health officials more broadly. And we should note it's not just USAID that we're talking about. There were also a number of G7 countries that significantly scaled back on their own foreign aid assistance, many of them in Europe, just to prioritize their own domestic agendas. That has contributed to a weakening system on the ground in terms of contact tracing, antibody treatments. And so this is really the concern here for health workers as they are trying to control this very rare strain of Ebola on the ground. Funding is a significant contributor. If you just take a look at what we have seen from the U.S., though, OECD figures actually point to about an annual global development assistance drop by just about 57%. So significant in terms of what it is that health workers need on the ground and also what it is that they need to control the outbreak.
Yeah, so a pretty horrendous symptom of the fiscal squeeze that we're seeing around the world. So if you've got less funding and less surveillance networks, does that mean that actually what the numbers are being reported could be underreported?
Yeah, exactly. And that is the real concern by health officials. And, one of the health officials that Bloomberg spoke to actually said that they're concerned that there's underreporting, right, going on, just because it is unclear just how long this specific Bundibugyo strain was passing through and transmitting through the public. And it's not just that. The complicating element of this is that this is also a very difficult terrain. If we talk about the Democratic Republic of Congo, strained health systems. And so it puts even more strain on the health system as a whole to actually contain and know how far reaching this current outbreak is. If you take a look at just one point that we also pointed out in our reporting is, and you pointed this out in your intro, it's a mistrust by the public that is also making things a lot more difficult, leading to risk events such as burials, even more complicating to containing this.
OK, well, it's a really fascinating read. It's the big take of the day. You can find it on the terminal and at Bloomberg.com. But for now, Jen, thank you for bringing us the details. Bloomberg's Chief Africa correspondent, Jennifer Zabasajja. Now, to some other top stories we're following for you around the world this morning. President Trump says that Bill Pulte will only serve as National Intelligence Director on an acting basis, adding that he's interviewing permanent candidates for the position. The move had drawn criticism from Democrats and some Republicans who've stressed his lack of relevant experience. The previous Director of National Intelligence, Tulsi Gabbard, announced late last month that she would step down to help her husband deal with health issues. Elsewhere, the US Supreme Court has strengthened the Securities and Exchange Commission's ability to recover illegal profits. The justices unanimously ruled that the SEC does not need to identify specific investors who were harmed in order to seek disgorgement. The decision reinforces one of the agency's main enforcement tools and ends a recent losing streak for the SEC at the court. And Chinese President Xi Jinping will travel to North Korea next week, marking his first overseas trip of the year after recently hosting Donald Trump and Russia's Vladimir Putin in Beijing. It'll be the president's first visit to Pyongyang since 2019. North Korean leader Kim Jong-un has recently been stepping up diplomatic activity and showcasing his expanding nuclear arsenal to the outside world. So those are some of our top geopolitical stories this morning. But coming up on Daybreak Europe, SpaceX won't rocket into the S&P 500 as the index company rejects plans for faster entry for mega-cap stocks. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Anthropic's co-founder and president says that the high cost of developing artificial intelligence models is driving firms to look to the public market for capital. Daniela Amode spoke exclusively to us at the Bloomberg Tech Conference in San Francisco, just days after the Claude maker filed confidentially for its highly anticipated IPO.
Yes, you're correct. We confidentially, filed our S1, and that gives us the option, to potentially go public after the SEC review. Unfortunately, that's all I can say about anything IPO related. I'm sure you understand.
I mean, if we can just maybe level up a little, what is the calculus for a kind of an AI company generally to go public or not in this moment? What are some of the pros and cons here? Because on the one hand, yes, you can access more capital if you're not a startup. But on the other, then you're beholden to quarterly results, shareholder calls, et cetera. So what are some of the pros and cons just generally for an AI startup, do you think, to go public in this moment?
So I think, at least speaking for, ourselves, and I think ideally, probably really for the AI industry more broadly, it's a very capital-intensive business to train AI models. I think that's something we've been, very open about from day one. I don't think that's, a surprise in the industry. And I think this kind of concept of how do you access the level of capital that you need to train these models, right? It's a really big kind of upfront cost to train the models and to serve inference on them. And I think that is, my guess is that, over time, the sort of core set of companies that are working to advance the frontier are just going to need access to capital. And I think the public market is very well suited to that. So there's obviously, of course, trade-offs, but my sense is there's just a fundamental structure of how training and kind of serving these models for customers works, that it will require that level of access.
The Anthropic co-founder and president Daniela Amode speaking to Bloomberg's Shirin Ghaffari in San Francisco. Well, speaking of IPOs, SpaceX won't be getting a fast track into the S&P 500. S&P Dow Jones Indices has rejected proposals that would have accelerated entry for mega-cap companies into its flagship benchmark, keeping existing eligibility requirements in place. Let's go now to Manuel Baigorri, who leads our APAC deals coverage. Manuel, I do have to ask you why the S&P's made this decision. It seems kind of weird not to have potentially the biggest IPO in history not in the S&P for a year after its listing. Surely you will have the index not reflecting the economy, the economic contribution of this company.
And definitely, Lizzie, one would have expected that the largest ever IPO globally would fast track and make it immediately into the index. But hey, here you go. They are following their procedures, and they want to make sure that everybody follows the same basic steps to get into the benchmark. So at the same time, investors obviously would have hoped that there was a case of a fast track here, given the visibility that it gives. But the company at its sheer size and global reach speaks by itself. So it will be index or not index, it will be well aware for everybody. But definitely for those fans that track indexes, it will be a little bit more cumbersome to potentially buy shares or get exposed into SpaceX. So yes, a little bit of a surprise in a way. Everybody thought that given the size and the magnitude, it would get fast track, but at the same time, one would understand also that S&P wants to also follow its procedures with every company as well.
Well, let's hear from the man himself, shall we? Because Elon Musk took his SpaceX IPO roadshow to thousands of JP Morgan's high net worth clients yesterday evening. He was joined by CEO Jamie Dimon at this live event to make the case for the listing and talked about the company's plans for space-based data centers. Let's just take a listen.
It's really just solar power plus radiator, some basic equipment for operating the satellite, and then the laser links, which would connect to the Starlink communications constellation, and then then to the ground. And the connection would happen no matter what the weather is.
So, Manuel, what else are you watching out for from this roadshow then?
Well, definitely the appetite, it seems, from Japan, definitely there is a lot of demand. We've seen that they are increasing the allotment there. So definitely a lot of global demand from investors in the next few days will be critical. It's arguably the most closely watched transaction globally, definitely the biggest. And I mean, just remember, Lizzie, 1.8 trillion market cap. It's just tremendous, right? And the sheer size of the fundraise itself, $75 billion. I mean, we've never seen something like that. Just go back to 2019 when Aramco raised $29 billion. At that time, it felt just incredible, and this is more than twice that amount. So it's just incredible. I mean, definitely everybody's talking about it. AI has become obviously such buzzword that even here in Asia, right? There's so many companies that are looking to list in Hong Kong in this case, but it just clearly shows how much demand there is for equity capital market transactions globally. And I think the US is quite remarkable also this year. After quite some time in the doldrums, we are seeing the likes obviously of SpaceX, but also Anthropic, OpenAI, also waiting to come to market in the coming months. So it's going to be a real busy year. And also the question is how much more demand there is for all of these mega companies as well.
Yeah, obviously loads of questions about whether SpaceX is going to be able to justify this targeted $1.8 or so trillion valuation. But really interesting research, Manuel, from analysts across research, but including from Evercore ISI research analysts that we have reported, saying that IPO buyers are being told that the AI division could see 100 times revenue growth at the end of the decade. Pretty impressive, right? So that report on the terminal, 100 times higher by 2030. Definitely. Manuel, thank you so much for the context. Bloomberg's Manuel Baigori there. Have a great weekend. Well, let's also, as it's Friday, talk a bit of football. FIFA set to make billions of dollars from this summer's World Cup, but at what cost? Bloomberg Original's weekly doc explores just how dynamic ticket pricing and soaring costs are leaving ordinary fans priced out and host cities under financial strain.
So, you want to go to the World Cup? Well, it's going to cost you.
I don't think we're going to the World Cup anymore, bro. They're cheapest, $7,000.
Original purchase price $446, resale price $22,316. It's insanity.
The World Cup's return to North America will be unprecedented in more ways than one. It's the first FIFA tournament to take place across 3 nations, with 16 host cities in the US, Mexico, and Canada.
This is the first tournament where we're going to have 48 countries represented instead of 32. That means there's going to be 104 matches played.
It's also the first World Cup where tickets are subject to dynamic pricing. And that's changing the game, so to speak.
What dynamic pricing means is that prices change, could be on an hourly basis, on a daily basis, or weekly basis, depending on supply and demand.
This is something that we are used to seeing in the US, but around the globe, this is the first time they've ever introduced something like this.
The US is the ultimate market, and FIFA's using that to their full advantage in this tournament.
We have to apply market rates. This is the World Cup.
You have a lot of resale, a lot of speculative buyers going in there to later try to sell for a markup. And so the big question I think people have is this demand real?
And ticket prices aren't the only obstacle for fans.
Trump's policies on immigration and tourism have proved to be very hard for some people from specific countries to get visas to attend the tournament.
And if people can't or don't attend the games, then what seemed like a profitable event for host cities could turn into a financial black hole.
And that full documentary available now for Terminal subscribers and on the website. Well, we've got plenty more coming up. We'll look ahead to that crucial US jobs report out later with some Terminal charts to frame your day. This is Bloomberg.
Right now, policy's in a good place. We are prepared to respond either way, whatever the economy brings. But I think giving more forward guidance about what's possible could be misguiding in the end, because we just have to wait for the economy to evolve. Everybody wants to resolve the uncertainty today, but I think that's a mistake, because it will close off our mind about what we really have to look at.
San Francisco Fed President Mary Daly there calling for cool heads and patience in policy making. Well, we've had a drip feed of jobs data this week. The highlight coming today, filling in the blanks of what's really happening in the US economy under the hood. Let's start off with the story when it comes to layoffs. Layoffs in the white line here, but you can see they've actually stayed subdued. But when we look at tech, the blue line, and this is from the Challenger data, they've surged to nearly a 2-year high. Now flip the board and I can show you perhaps why. Let's look at the tech companies and how many job cuts they've been making. It seems the more is spent on AI investment, the more jobs are cut. But the silver lining here is the expectation is these firms are promising more hiring than any sector. That underscored by Challenger alongside the report. Now, the highlight, of course, of the week is the big payrolls report today. These are the expectations. We're looking to see a solid rise in payrolls in May, unemployment holding at 4.3%. But just think about how bearishly bond traders have been positioned heading into this report. We could see a real market reaction if indeed it's weak. The opening trade's up next. I'm on with Tom McKenzie. This is Bloomberg.